All right, happy to welcome in my friend from the Midwest, Kansas City, Mr. Craig Hemke from TF Metals Report. Craig, my first question for you, does the golf game get better or worse during major pullbacks in precious metals for you?
It actually gets a little bit better.
Oh, nice.
Because it means I'm spending less time in my office because it's like, screw this. I'm not going to sit here and watch this crap every day. So it's like, I'm getting out of here. I'm going to free myself from the doom and gloom in the short term and go get out and get some sunshine and try to remain focused on the bigger picture.
Yeah, that's right. As one should, not just be looking at price action every single day. We're going to just talk about this today's market. More volatility, Craig. We've gotten to this rhythm all week where the major indices try to move up higher in the first hour or two of trading and then subsequently get sold off into the red throughout the day. And that's, as we are reporting here, the market's been open about an hour and a half now, that from this Thursday morning at the time we are recording, and it's doing exactly that. NASDAQ was up at 1%, about the market open, is now trading a 0.5% higher. That's well off those highs. But the nice thing I'd like to see here, Craig, gold not really sharing the sell-off right now. We'll see how the rest of the day is. I know, shocking, relatively flat. So I will take whatever silver lining I can get right now. But we are reaching some very technical areas of support for gold. How are you watching this tape right now?
I'm actually been vocal on my site, and now that I've got my Twitter account back, I foolishly clicked on what looked like a legitimate email from Twitter about 3 weeks ago. I know, what a dumbass. I have become an old person. There's this king of an African country that needs some cash. I'm going to try to help him out too.
All the innuendos in the back of my mind right now.
It's awesome. I'm just, So anyway, now that I'm back on Twitter, I've been trying to tell people this too. I've been itching to hit the ATM and sit down at the blackjack table for a fresh shoe. The table that is the COMEX. But I haven't done it yet. I think there's one last little plungerama. The GDX came down and broke down below its 200-day moving average about 3 weeks ago. And when it did, gold was still well above it, and silver was, silver was $90 a month ago today. And so I thought, well, if the GDX is breaking down, then probably gold's going to fall. Then gold goes down to its 200-day. And I thought, okay, well, if it loses its 200-day, that's going to turn the momentum against us a little bit. Because, these markets are such a sham. I mean, there's not very many people like normal, like breathing human beings like you and I that trade anything anymore. It's all just computers. And that's why you get these mass liquidation days like we had last Friday and again back on whatever it was, Tuesday. One set of computers sells off, whatever, the bond market, and then another set of computers sees that and they buy the dollar, and then whole different set of computers sees movement in the bond market and the dollar, and they start dumping gold and silver, and a different set of, and it's just now it can work in our favor too. But I don't think we're done. So anyway, my pullback that I've been waiting for. Once we lost 4,400 in COMEX gold and the 200-day, I thought, I think they're going to try to flush it once down below 44,000 and just freak everybody out. And I've been saying this for a couple of weeks, and I thought, if I could take a trading position at that point when it looks the most bleak, and right before the first Warsh-led FOMC.
Yeah.
So we'll see. I'll give you one more. It could also be just dead freaking wrong. We lost $1,000 in gold in March when the yield curve shifted 50 basis points and Turkey sold 100 metric tons. We could lose another $1,000 at any point if the yield curve shifts another 50 basis points and central banks drop another 100 tons. So anything's possible in this weird world that we currently exist in. But that's how I'm looking at it for now.
Yeah, how much of it has really been the basis of tensions in the Middle East? Obviously, this thing continues to escalate. The last 48 hours, I think we've seen more headlines of escalation
Yeah.
between US and Iran, and throw in the other countries in the Middle East as well. But how much of that is really playing a factor in the gold move in your mind, as opposed to, say, real interest rates, which is usually the dominant factor that
Right.
puts headwinds in precious metals?
Dude, that's exactly what it is, and the it's like the real interest rates have always been the key and
Mm,
that's everybody says it's inflation. No, that it's the inflation component of the real interest rates, your nominal rates adjusted for inflation. And so when people say, "Well, it's an inflation," it's no, that's half of it. And so now you get the people saying, "Well, see, gold's not a safe haven after all." As if again, what's really happening is what people are now perceiving as positive real interest rates and this inflation risk and this supply shock that the Fed is going to somehow address with higher rates and all this kind of stuff. And that's fine. I mean that's how these computers are acting and the hedge funds are acting and everything else. And that okay, fine. But I don't that is the story that will eventually turn back in our favor because at what are we, $40 trillion dollars now in accumulated debt, another
is that it?
200.
Is that all?
Yeah, that's all. Trevor, just yesterday, once a month, ninth business day of the month, the Treasury Department puts out their monthly Treasury statement. It's accounting for the previous month, and then they show you the accumulated in the fiscal year, which in the U.S. ends September 30th. $293 billion deficit for May.
Hmm.
Dude, you and I are old enough to remember when that was like a whole year. And it was, this calamitous thing. Oh my God, can you believe this? 293 billion. These politicians are so irresponsible for a year. Now it's a month. $10 billion a day. $400 million an hour. I mean, come on. The only way that can be managed is through negative real interest rates, paying off yesterday's debt with the cheaper dollars of tomorrow.
Right.
That's the only way they can do it.
Yeah.
And that is why, the gold price 10 years ago was 1,100 US dollars to buy an ounce of gold, and 5 years ago it was $2,100. Today it's $4,200, and within the next 5 years it'll be $8,400. And so you look at this, yeah, it's calamitous current situation, and it's gives me fodder to write and talk about, but in the end, it's like, whatever, I'm gonna go out and hit some golf balls.
Let me add, you haven't been on the podcast for a while here, Craig.
Well,
So
you
let's
never
talk.
call,
Uh,
it makes me sad.
one of
I
these
sit around
days,
like,
I'm gonna
Trevor
just take
never
when
calls
I'm back
anymore.
in Nebraska visiting the family. I'm just gonna drive down to KC and knock on your
Yeah,
door and say, "Craig,
there
let's
you go.
go."
I'll be like, "Honey, turn off the lights like
Yeah.
it's Halloween."
No, but no, nobody does that anymore. I remember, growing up, it's like you don't need to call somebody to see if they're home. You just go to their house and knock on the
Just show
door, and if they're
up,
not home,
right,
then you leave, right? So
right.
we'll go the old school way. But let's talk about Warsh and that first
Yeah,
FOMC of his meeting of his coming up. Obviously, the market's pricing one thing. We can talk about the anonymity of the Federal Reserve, but let's just say I've never seen a less anonymous Fed
yeah,
now than and that's saying something, not that there has been for a while. However, the administration wants something else, and they're
mhm,
stuck. I mean, I wouldn't be surprised if he just comes out and says, "We're not doing anything. We're
right,
sticking to it," because inflation, I do believe that obviously we're in an inflationary environment. The sticky inflation is monetary inflation. It's not supply driven inflation.
right,
That, dare I say, is transitory. And I think that's the world we're living in. Not until we get the huge money printer go burr and monetary printing press going on, is that's when we'll get the huge round of inflation. However, so that is the backdrop. Expectations of Warsh and really the shit sandwich he is in his first month.
Well, you remember when that was announced that he was gonna be the guy, um, that was late January when the metals, and we can talk about all the different reasons for that, big drop in late January. But it was like, "Oh, he's gonna be this big hawk." I was like, "Give me a break." I mean, Trump has been clamoring for rate cuts. I mean, he cooked up this crazy case trying to get Powell to quit, right? He's been so do you really think, looking at the current situation, what's coming over the horizon, that Besant and Trump were sitting in the Oval Office bringing in people, to run the potentially replace Powell, and War sat there and said, "Yeah, screw you guys. I'm gonna do my own thing. I'm gonna hike." And they said, "You're our guy." Come on.
Mhm.
I mean, he's the third leg of the stool of this plan. Now, that said, he might I don't know what to expect next week. I mean, we haven't had an FOMC led by anybody other than Powell in 8 years, and so what's he how's that gonna go? What's he gonna say? What's his press conference gonna be like? It's gonna be must-watch stuff next Wednesday for a dope like me. My suspicion, since he's been on the Federal Reserve Board of Governors before, is he's probably gonna come in and kinda try to placate those people a little bit,
Mhm.
the rest of them, because he can't do it by himself. I mean, for those that are listening, don't know how this works. I mean, it's a committee, and they vote on, they kick around, they all who knows what the hell they talk about, but they sit there, they do their thing for 36 hours, and here it comes. Um, he'll probably play along with that. There's not gonna be a rate hike. Um, but, the language will be, "Well, we're watching this closely, and we're gonna, blah, blah, blah." He's gonna still trend toward managing this untenable situation, and the only way you can manage it is through lower interest rates, eventually yield curve control, and everything else that they've got planned. Uh, but to begin with, I would imagine, um, he'll just kinda play ball with, Williams and all the girls on the because he's there's a lot of women on that thing now.
Mhm.
You ever look at the list, like, it's like this it looks like a dinner party, like all these couples came to the FOMC together. Um, so he'll play along and play ball and make it sound like "Oh, yes, we're gonna be very diligent, and our dual mandate," and all this other stuff. Um, and that might what? That might be enough to kinda spark a little bit of a rally if he's perceived to be not quite as hawkish as everybody fears.
Yeah. One of my concerns here, Craig, is that the committee of the Federal Reserve starts to resemble a lot of like Congress, where it's so divisive and so biased and
Yeah.
so in their corners,
Mhm.
where they get
For
to the
sure.
point where they can't do anything,
Right.
let alone their job. Right?
Right.
They can't come to
Right.
any agreement because it's so political. And not only is it so political, it literally is an incredible debate of the best thing to do to go forward because
Yeah.
we can't let things fail and we can't let cycles play out. We have to keep the party going,
Yeah.
right? And nobody will ever wants to take the blame to allow a cycle to end. Nobody wants to have to be the melee who comes in and says things need to be broken
Yeah.
so we can restart because there's just not that support,
No, I
as
think
a
you're spot
society.
on, brother. That Trump is so polarizing and the situation is so polarized, that if you are I mean, you see it at the, federal and even state level, that
Mhm.
if there's some idea that the, Trump administration has, you get I just read something about, uh I had no idea about it. He wants to have, like, some national state fair or something. I saw this headline this morning.
State fair.
Right. And, like, where almost like a remember they used to do the global, where
The
the
World's
the
Fair. The World's
World's Fair,
Fair.
yeah.
Yeah,
So,
yeah,
like, a
yeah.
World's Fair for in conjunction with the 250, and, like, these Democrat states, aren't gonna play along. I'm like, "Seriously, we can't even do this?" So, your point is well taken, and that's, I think, part of why and again, everybody expects not everybody, but if you're some fuzzy-headed academic that's never had a job outside the Fed like most of those goons, and you're progressive Democrat leaning, you're gonna be viewing Warsh as you may know him and everything, but you're like, "Oh, I'm not gonna go along with whatever he says."
Right.
And so that I think your point is well taken, that Warsh is gonna try to be very pragmatic, not hike rates immediately, and not hike rates unless it's absolutely, I don't even know what would be absolutely necessary.
Right.
Um, but anyway, but I don't think he's gonna come in clamoring for cuts right away either. That's what changed. We were kicking ass and taking names coming out of last year and into January and even into February. I mean, GDX had its all-time high close on February 27th. Oh yeah, silver was down and gold. Yeah, but the share, everybody was looking ahead to 1 or 2 cuts. Even the Fed, the SEP coming out of last year, they did these summary of economic projections on the quarter. Coming out in December, they were expecting 2 rate cuts this year. And by the March SEP, it was down to 1 because of the war. Now, who knows what the one next week's going to show price, certainly 0. So, I mean, we were cooking. And everything was, there was a reason why everything was working for us. And now
Yeah.
in the last, everything changed that last weekend of February 1st to March. And we've been having to deal with a new paradigm ever since. And so I think Warsh was planning on coming in and cutting and doing all this stuff. But now he's got a kind of little song and dance act to try to, win friends and influence people for
Yeah.
a couple of, FOMC meetings before he can do what he wants to do.
I really do think, and obviously, Craig, you know me. I mean, I'm very critical of this administration. And I would say, 2 years ago, when the administration was coming in and the cabinet members were being put together, like, there was parts of it I was very optimistic about. I was very excited about Besant coming in. I was very excited about Wright, and I think some of that optimism has definitely faded and faded quickly in the last 6 months. Now it just seems pandering, right? And I do
Yeah.
believe, I mean, the books will be written in time. We will see how things play out. But it just feels like you're right. You know, Trump was right in January. Hottest country in the
We
world.
were we were cooking.
We were doing very well. But then one major overstep will go to define not only this presidency, but will potentially define a new global order that will be the end of a U.S. denominated
Yeah.
foundation.
Yeah. Yeah.
This will define not only a presidency, but it will define the U.S., I think, as where we stand in the global order. And you can say it's cyclical. You can say it was going to be natural and this was going to happen no matter what. That's fine. But at the same time, I'm sitting back here. I'm like, man, what a freaking time to be alive and watch this all in just amazement.
Yeah.
As
Yeah.
scary as it is, it's like, I don't have to read this in a history book.
Right.
Like, I can
Yeah.
watch it
You
every
get to tell
day.
people about it. You say, "Yeah, no,
Yeah.
here's what really happened." No,
Yeah.
it's either a very bold act of leadership that is actually gonna still turn out okay, which is probably unlikely, or an extreme act of hubris,
Mhm.
and arrogance to think that just because you snatched up Maduro in Central America in the middle of the night that you could, wipe out an entire sovereign nation, and get him to bend to your will. So we'll see. It is definitely as we sit here, what is today? Thursday, the 11th. It looks like, it's about to really unwind. Um, Now it's looked like that before. I remember back in early May, there was a day where Iran hit a bunch of missiles into some of the other Gulf states, and I thought, okay, here they come now. I mean, it's on, and that was a low that day.
Mhm.
The metals then rallied substantially over the next 10 days or so into the May CPI. Coincidentally, back on May the 12th or 13th, that's when silver was $90 briefly about a month ago today. Um, so it could actually, if they get it on and it leads to where you can look over the horizon and actually see an end to it, or at least some kind of resolution, then maybe that will be perceived as a good thing. But as we stand here now, it's like God knows what's going to happen next. And
Well,
to your point about loss of hegemony and all that kind of stuff, um, if it is shown, the U.S. always had this hammer, right? Don't do this because you don't want to deal with the hammer. Well, if
mhm.
we've shown that the hammer really isn't quite as heavy as we put out there, well, then why would anybody, it definitely lessens the potential to, persuade going forward.
Yeah.
So
It's
we'll
funny.
see.
Treasury Secretary Bessent tweeted or X today. It would be a zero-sum game for Iranians. Any damage it inflicts on our allies in the Gulf will be paid for with funds extracted from Iranian accounts. So he's going back to the same drawing board of economic sanctions. It's like, bro,
Right.
that we have reached the place of diminishing returns with economic sanctions years ago before you were even in office. Like,
Yeah.
just give me a break.
And Trevor, too, that was, I think we all trace back now this surge of central bank gold demand for the last, 23 through 25 that was record breaking. We all trace that back to when they did that to Russia, and the Russian-Ukraine war started in 2022, seizing their assets and kicking them out of SWIFT and all that kind of stuff. So, you may not necessarily be a friend of Iran, but you can look at that and go, oh, okay. Again, more proof that I get sideways with the U.S. This is what they're going to do. I better keep buying gold, as protection. And again, so which underscores that trend, even, Turkey blowing out 100 metric tons notwithstanding, that trend, I think, remains, that it underpins the gold price as well. Short term, intermediate-term, long term.
Yeah, very good. All right. Craig, good to connect with you. I love our discussions. Good luck with that golf game this summer.
Thanks. I'm an old person, man. I'm starting to move up to the white tees.
Just beware of the vacuum salesman at the front door, okay?
That's right. And beware wait a second, who's this homeless person at our front door, dear? Turn the lights off and go hide. Maybe it'll just go away. Anyway.
All right.
Thanks, brother. Buddy. Enjoy your summer.
Yeah, TF Metals Report, everybody. Craig Hemke. Go follow him again on X, and then we'll have you back on in the next couple of weeks here, Craig. Talk to you soon.
Let's do it.
The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.